Hey everyone, I'm Ed here with Down to Trade. Welcome back to another episode of our deep dive into the world of options trading. Now, once again, we are joined by the ever knowledgeable Varian Croft. Varian, glad to have you here, bud.
Glad to be here.
All right, so today, look, we're going to be discussing something that can really have a gigantic effect on a trader's performance. Now, and we're going to be talking about the impact of market news on options pricing. So it's a kind of a theme that can make or break an option strategy. And then obviously later, Varian will be kind of unveiling his latest strategy from his options backtest laboratory. So we do have a great show for you today. But before we jump into the discussion for today, just a quick update. I know we've been having a fantastic week so far in the day trade room. I think we've hit our goal every day this week except for Monday. And on Monday, we ended up just at break even. But so we're all excited about that in the day trade room, but how's everything going in the swing trade room, bud?
Man, swing trade room is going awesome. We had another trade, earlier this week, or end of last week, hit profit on.
Yep.
We did have to take a small loss on our Tesla trade.
Yep, but it was tiny.
Yeah, it was a little one, but even still, I mean, we're still.
I know you really like your win rate.
Yeah, that 75% win rate.
Yeah.
So, I mean, got no complaints, man. We're loving it right now.
I love it. And right now we're in what, AMD and
yeah, we got into AMD today on the gap up. So with the nice run that it's had today, that position's already looking good. And then last week we started a longer term position on Apple. We jumped into the start of a poor man's covered call on Apple.
Right.
So
that's right. Okay, awesome, man. I love it. So I guess we can go ahead and just kind of dive right into the discussion today. So if you're ready, let's get down to trading.
Absolutely.
All right, bud. All right, so again, we're going to be talking today about the impact of market news on options pricing. Now, whether it's an earnings announcement, an economic data report or release, it could even be geopolitical event. News can really shake the very foundation of the options market. So let's start, I guess, by brushing up on the basics of options pricing. Now, at its core, as we all know, options pricing is influenced by intrinsic value, time value, and a few of the Greeks. But one of the most pivotal components, especially when news hits the market, is implied volatility, or IV for short. Now, Varian, you and I have discussed IV numerous times, but would you agree that news can play kind of a substantial role in IV?
Oh, in short-term basis, it is the largest catalyst for IV. So, yeah. It's huge.
I couldn't agree more. And as we know, IV essentially reflects the market's forecast of a likely move in the underlying stock, right? And that's really what implied volatility is. Now, when unexpected news hits the market, IV can spike, as we know, significantly affecting options prices as well. And that brings us to the different types of market news. We've got everything from economic indicators like unemployment rates or jobs reports to company-specific news like earnings reports. And we can't forget global events, or like I said, geopolitical news. These can come out of the blue, what we would call a black swan event. You'd agree that these can drastically impact market sentiment and therefore option pricing, right?
Oh yeah, huge.
It can be small, but of course they can be extremely substantial.
Yeah, well, I mean, the big thing, one of the great things that you can do is always go back and look at the charts and look at what IV did. But I mean, I remember it. You and I were both actively trading. We were on a Zoom together when the war between Russia and Ukraine officially broke out, and the impact that had on the market, it was huge.
Absolutely, and it really is crucial to kind of differentiate between the difference between the scheduled events like you said, the Federal Reserve meetings and whatnot, and unscheduled, like sudden political developments. differently, right? I guess diving deeper, let's talk about how this news actually impacts options. Now, the key player here is, as we kind of discussed, is implied volatility, or IV. Now, before a big news event, IV can rise as uncertainty increases in the market, often leading to more expensive options. And after the news, well, we typically see the IV crush, where IV plummets following the event, right? And again, this can drastically reduce the price of the option. So during the IV spike, before the news, we'll typically see a rise in option premiums, whereas after the IV or after the news is already released, we get that IV crush, which should drastically, or could drastically decrease option premiums, correct?
Oh yeah, absolutely. We had a great example of that with our ARM trade.
Yes. Oh yes.
Yeah, ARM was at 200 and some odd IV rank, and on that gap up that it had, it just over 200 IV rank. I mean, that's just,
we didn't even need the market to move. We were just riding the IV crush on that one.
Yeah. So when we jumped in that trade on that, it took a couple of days. IV sucked out of that thing, dropped back down into the 70s, 80s.
Yep.
And we were out for profit.
Yeah. So obviously, this is a very critical concept for options traders to understand. Now, can you explain how that might differ? So scheduled news events, we understand that, again, prior to a scheduled news event, premium can go up because of increased IV, and then premium could fall after the news comes out. Can you explain how that might differ from an unscheduled news event?
Yeah, absolutely. So what you find is, with a scheduled news event, because everybody knows about it, they see it coming, you'll watch as the IV will slowly curve up to the event, and then it drops off. Where an unscheduled event, you're going to get the opposite. Your IV is going to jump up, and then it's going to slowly curve and start tapering off from the unscheduled event.
But is there anything we can do as options traders to take advantage of scheduled news events, since they are predictable?
Oh yeah, absolutely. I mean, that's, I think that's something that we do fairly frequently, is when you know those events are coming. One, you can, if you're having questions, just don't trade during that time. That's like one of the best protections that you can have in place, is that if you think it's going to be too volatile, just don't trade during that time period. But if you are going to trade it, those are the great times that when that IV starts spiking, that you can look at selling credit to take advantage of that volatility crush.
Right, exactly. I love it. So yeah, there are a handful of strategies, and there's quite a bit traders can do to position themselves ahead of the news release. This includes, like we were talking about earlier, hedging, choosing the right expiration dates, and closely monitoring the news to adjust positions as necessary, which is stuff that we do all the time. For instance, in the day trade room today, we actually hedged our straddle that we had on with a debit spread. Now, that debit spread occurred during an IV spike. Doesn't even matter what caused that IV spike. We didn't even have any clue what actually caused that IV spike, but we got into a hedge to protect ourselves from a downward move. Now, we did anticipate a bounce down here at the 50.64 level, and that bounce did occur, and we were able to actually make money from that hedge. Even though that wasn't the initial intent of the hedge, we were actually able to make money from that hedge, and it ended up being a nice little position. And then later on, of course, we were able to exit that straddle at our daily goal. But I know you also use scheduled news events to decide when or how to enter a trade, right? As well as how to manage the trade, correct?
Yes, absolutely.
Like, for instance, if I know with one of your swing trade strategies, you will use low IV or high IV, like you kind of already discussed already with the ARM trade. You use a high IV to decide whether or not to enter as a debit spread or a credit spread, correct?
Yep. Oh yeah, absolutely. I have very definitive rules for the swing trade room that, depending on the IV level, is the type of trade that we're going to get into.
So it just goes to show you that kind of being proactive rather than reactive in the options market really does make a big difference. And remember, while staying informed is key, understanding how to interpret and, more importantly, act on that news is what truly separates successful traders from the rest. It's one thing to know that news is coming out. It's a whole other thing to know what to do with it, right? Now, I want to actually talk about some of the sites that we use to find our scheduled news events. We use quite a few different sites, including Forex Factory. Now, Forex Factory is nice insofar that it provides a really nice calendar and everything's nicely displayed. However, it often misses some of the major news events, including treasury auctions, which with the bond bubble that we were in last year can be a really big miss if you don't know that it's coming, right? But probably my favorite news site is going to be Financial Juice.
Yeah.
Financial Juice to me is, I mean, I use both every day, but certainly I'm watching Financial Juice throughout the day. Again, they do have a free event calendar and they do have a free news feed. And although the free version is delayed, it's still a fantastic news feed that we watch throughout the day, every day. Also, I've got to say, I'm really loving the Squawk Box and the Tick Strike. Now, the Squawk Box is just an audible announcer that announces the news, so I don't have to always be coming back here to look at the news. As I'm trading, as I'm looking at my charts, I can just hear the news, so that makes it extremely easy. And what else? The Tick Strike is really cool because throughout the day, I'm constantly hearing it. It's an audible sound that it gives you one sound for large uptick moves, and it gives you another, a different audible sound for downtick moves. And so it's fantastic to have that going off in the background. I just kind of know I could be looking away from the screen or I could be reading a news event, and it gives me it tells me whether or not the market is moving fast up or moving fast down. So that's why I love these two tools. So I personally have both of these on all day as I trade, and I suggest checking out the free version of Financial Juice. And then if you love it and you want to get rid of that delay on the news feed, you can always subscribe. But I'll go and leave an affiliate link in the description below. But Varian, can you think of any other sites that we actually use a lot?
No, I mean, it's Financial Juice, Forex Factory, and then we always check the White House schedule.
Yeah. Oh, yes, that's correct.
Yep.
Thank you for bringing that one up. Yeah, I always look at the White House. So absolutely. I was actually recently introduced to tradingeconomics.com calendar, and I've got to say I'm kind of liking it. It doesn't update as fast as Financial Juice. Again, I do have the pro version of Financial Juice. I get up to the second updates with Financial Juice, but the tradingeconomics.com calendar is pretty darn good. So I that's another one that we look at. I guess you could also say we also look at Twitter, huh? So.
Oh yeah. Well, and I feel that Twitter is, I mean, it's amazing. But I feel like that's where I go when something has happened and we're trying to figure out what.
Okay, fair enough.
Yeah, so like big spike in volatility, the market all of a sudden started dropping and there's no scheduled news. Twitter's where I run to find all the unscheduled stuff that pops up.
Right. Well, because that's a very important aspect of the trade today. It's hard sometimes to know whether or not that spike is occurring because a large financial institution is manipulating the market, or if it's because of a news event that we just don't know about yet. And how you react and how you manage that trade will differ based on which one of those two it could possibly be. So it's very important to know quickly what news is occurring, so that you know whether or not that spike is a reaction to said news. Okay, I mean that's pretty much all I got for that part of the discussion. Is there anything else you could think of?
No, I think this is really one of those things that if you're not paying attention to the news and you're sitting there in a trade and something happens and you just don't understand what, this is possibly that component that you're missing in your trading, to just like understand why the market is moving the way that it is.
and more importantly, how to manage it from that point on.
Yeah, exactly.
Right. I love it. Okay. Well, Varian, once again, a little birdie told me that you have another killer back test for us today. But before you get there, I know you actually traded the strategy that you introduced to us last week, right? How'd that go for you today?
It worked out beautifully. It ended up being about a 30-minute trade.
Obviously, I know it's hard for me to jump into all of those trades because I'm moderating the room and I'm answering questions, but can you tell us a little bit about how it went today and what happened with that trade?
All right. Yeah. So the trade that we had back tested last week was a 1 day to expiration SPX that after 10 o'clock, if the SPX was down more than 5 points from the open, you enter a put credit spread at the 25 delta, 25 wide. So today on the SPX, when this broke down, we ended up hitting that plus 5 points. And as it came down into here, and this candle, gave us that close of more than a 5-point move, that's when I entered that exact trade. And as you can see, we got the bounce, it came in, we rolled back over. I think through here, I was maybe 20, 30 cents from profit target, rolled back over here. And then on this run up here, I got triggered out for profit.
I love it. And remind me, this one, your back test showed what, an 86% win rate?
Yeah, 86% win rate on that one.
I love it. They're just quick little base hits.
Yep,
that's all
exactly.
You really need. I love it. Okay, that's awesome. We'll tell you what. Would you mind telling us what you found for today's back test?
Yep, absolutely. So this one's a bit different than what I've been sharing before. This is still a day trade. This is, again, we're trading the SPX here, and you can see my options Omega, right?
Yes.
All right. So with this trade, this is actually a butterfly that we're using a 0 DTE, and this is a breakout of the 1 hour opening range. So based on the first hour of the day, that is what this is counting as the opening range. So you can see that right here. Use opening range break 10:30 a.m. So that's putting the opening range for an entire hour at the beginning of the day. And if it breaks out bullish out of that, so breaking out of the high only, what you're going to do is you enter a butterfly, and it's a 40 wide. So each wing is 40 wide. So the first one you buy is at the 50 delta, and then you're going to sell 40 points higher, and then you're going to buy at another 40 points higher.
Right.
So that makes it a 40 points wide on each side butterfly. And ultimately what the whole idea of this is that, and just to give a bit better of a visualization on it, just so it makes a bit more sense, here's Tasty Trade, and this is what the setup would look like. It would be just a bit different. Our strikes would move just a little bit based on what it's currently sitting at now. But the concept is let's say it's 10:45, because that was one of the other things on this, is the trade can only be entered after 10:45 a.m.
Got it.
So you need to have that opening range break. You need to be breaking out of that 1 hour opening range after 10:45 a.m. And 1 p.m. So if that occurs, what the expectation is of this trade is that it's going to continue bullish. And of course, the best situation you can have is if it pins at the 51.30 in this case. So this doesn't have near the win ratio. It only has a 50% win rate.
Yeah, but look at that risk reward ratio. That's
exactly. It's basically a 3-to-1.
Well, 3-to-1 reward to risk.
Yeah.
That's insane.
Yeah. So your average loser is about $700, but your average winner is about $1,800.
Wow. That is a very high expected return.
Yeah. Yeah. So, you know, this just shows that, like, and, you know, because of the way we're looking at these things, is it depends on the style of trade that you're doing. That lots of times, you know, as you know, when we're selling credit, our risk to reward is really skewed. We're lots of times risking, you know, 3 times what we have the ability of winning on a trade.
Right.
Where this is something that is the other direction. The max you can lose on this trade is the premium you pay into it. Right. Because you are buying it, and you can see with the back tests, you know, sometimes upwards of 900, but the majority of them, you're looking at $500 to $600 is what you're risking on that single trade, with a 50% chance that, and this is, all of these are just going to expiration.
Wow. Okay. Interesting. Yeah. Every single one of them. You're right.
Every single one is going to expiration. So there's no early exits. There's no profit targets. This is just, hey, we're getting the breakout, throw the trade on, walk away, and let it do its thing for the rest of the day.
I love it. Now, just to give you an idea of, for those of you who might not understand what I mean by expected return, imagine if I came to you with a coin and I said, hey, let's play a little game. Flip a coin. Every time it lands on heads, I'll pay you $3. Every time it lands on tails, you pay me $1. You would play that game all day long, because you would be making, that would be a money-making machine for you, right? Because you have the 50-50 win rate, or your win rate is 50%, but you have a 3-to-1 reward to risk ratio. If you're only talking about win rate, that's half the story. The other half of the story that really matters is the risk reward ratio, or in this case, with a higher reward, the reward to risk ratio. Because we're making more with each win, this has got an extremely high expected return. So I'm, again, very impressed by this one. Again, to kind of recap, staying ahead of market news and understanding its impact on options pricing is essential to every trader. And having a firm grasp on how news can affect IV, and then more importantly, how that IV can have effect on your trade, is such a vital and important role in the life of a successful trader. So I'm glad we had this discussion, man. I really appreciate you taking the time to join me here.
Absolutely.
Now, as always, if you'd like to learn more, or if you'd like to see how we both use news every day in our day trade and swing trade rooms, I certainly invite you to try out our membership for free. Just go to downtotrade.com. And right now we still have some really good promotions going on, right? Correct?
Oh yeah.
Yeah. So you definitely don't want to miss out on those. But again, just go to downtotrade.com for more info. And if you like this content, do us a big favor and subscribe to our channel. Don't forget to demolish that like button. It really helps us out, and we'd love to hear your questions and thoughts. So please leave us a bunch of comments. We absolutely love them. Other than that, thanks for tuning in, everyone. That's going to be it for me. Varian, do you have anything else to add?
That is all I've got for today, man.
All right, buddy. So until next time, this is Amit and Varian reminding you to learn it, trade it, and profit. Take care, everybody. Happy trading.